Okay, hello and good morning, everyone. Welcome to Easy Markets Daily Pitch International with me, Darius Anucauskas. Today's the 28th of March, 2023. So, yep, welcome, everyone. Welcome to this Tuesday's morning session where we're going to have a very quick look at the markets, a few of the charts, the usual stuff. But before we do that, as always, let's quickly have a read through our risk disclaimer. So, the content we produce does not constitute investment advice or investment recommendations and should not be considered as such. This material should not be taken as an invitation to acquire any financial instrument or product. So look, I'll give you a few seconds to read the rest. I'll disappear here for a little bit and yep, I'll get back to you in a bit. Okay, so now then, also just before we jump into the charts, just a quick update on our website, which you can check out for more information about us. You can check out our different trading conditions, guys. I mean, I believe you can find them useful. We are quite competitive, so I would say yes, for sure check us out. If you need to get in touch with us, please do. You can get in touch with me as well. We can talk to you about all that, and yeah, we can go from there basically. So look, I'm not going to bore you to death with anything else, but here, like I said, you can check us out, and I believe you can find some useful information. So guys, let's jump into the charts. So the first one I'm going to pick up here is Nikkei 225, as always. So I always start from that one when it's open, of course. So yeah, Nikkei 225, look, pushing to the upside. Yesterday we had a nice pop here to the higher. We pushed above all of the EMAs, and this is what I talked about previously. I said that, look, if you want to go a little bit higher, yes, I need to see that stronger move above all of the EMAs here on my daily chart, and also just additionally a push above that 27,440 territory could be ideal. Well, look at this. Yesterday we just went towards that area and just tested it, and then we drifted back to the downside, back below the EMAs. But I would say we're kind of oscillating around those EMAs right now. So let's see if we can get another push here. Look, I am cautiously bullish right now on this one because, again, yes, we are having these nice little pops here, but I need that stronger confirmation break. If I get that, great, I'll go higher. If not, then we might see this one just kind of, bouncing around here, like maybe oscillating around those EMAs. And to be honest, that's no good. No good for neither of the sides. So for the bears, probably they could get a little bit more excited if we do break this short-term tentative upside support line taken from the low of the 15th of March. Yeah, maybe depending on where we're going to be, maybe that 27,000 mark could come in nicely again. But hey, let's wait and see. Let's see what's going to happen here. ASX 200 pushed nicely to the upside. Look, I talked about this idea yesterday, look, don't really focus on it too much, basically. But again, keep it in mind. The idea is that we could be seeing here a nice little triangle, but look, we violated, for example, today the upper side of the triangle. We drifted back below it. In a way, yes, we are kind of, let's say, in a way supporting, respecting this pattern, but at the same time, we are kind of violating the upper side here, and it's not really, the most attractive one to look at. But hey, let's put all that aside and look, what I was talking about yesterday was that the prevailing trend here before entering into this pattern, the prevailing trend was to the downside. So in a way, if to follow the TA logic, then we could see further declines in a way. But again, for further declines, I need some confirmation breaks. And for example, in terms of confirmation breaks, I need a break of this short-term tentative upside support line taken from the low of the 17th of March, and also a drop below the 6,917 territory, somewhere around there, somewhere around those lines, because of this area, not specifically the level itself, but the area, marking here the low of the 4th of January. So we can see that, yes, we recently acted as a good area of support, yes, with a few false breakouts here, but yeah, eventually kind of this was the area that I was watching. So keep that in mind, guys. Let's see how all this is going to play out, of course. Now, in India's 50, so the Nifty 50. Okay, guys, look, I spoke, one of the viewers last week kind of mentioned this index. So look, this is not my, let's say, most the index that I look at the most, let's put it this way. But let's say if to just to try to apply technical analysis on it, look, in general, we can see that it has been on a decline for quite a while now. Let's say in comparison to the German DAX or the US indices, which are still holding up. This one kind of is drifting a little bit lower or continues, and to be honest, doesn't look very positive in a way, because okay, we could see a bit of a retracement right now. Let's say we are kind of, let's say after 16th of March here, we started forming these higher lows. My only issue with that is that maybe, just maybe, we could be forming something of a triangle, maybe something like, basically meaning that we could be coiling up here. So look, you could try to find a lot of reasoning here, or try to find some logic. In general, maybe somebody will say, hey, but maybe we're forming this nice ascending triangle pattern. It could be the case for sure as well. The only issue, like I said, I don't see any clear kind of moves here. Okay, look, okay, if we're going to try to squeeze something out of this, then maybe, let's say, a push above this little barrier. Let me just put a line here with a level. I think that would be a little bit easier. So if we do push above this, ooh, very thick. Push above this barrier, the 17,255, then yes, I will, from the short-term perspective, I will consider a move higher, but maybe not towards the 200-day EMA initially, but towards the 50-day EMA first. And then in general, the strategy here is that even if we do push, let's say, higher, I'm still kind of considering something like that, because in a way we are still trading below this downside line. So look, in a way we could see a push higher. Maybe, like I said, maybe this 50 could play out nicely, maybe the 200-day EMA as well. But if this downside line continues to provide resistance, guys, and we continue to trade below all of the EMAs, then yes, another decline here could be possible. So at this point, from the very short-term perspective, look, we are balancing up near this upside line. If it continues to hold, maybe we could consider this scenario. But for me to consider this scenario, I need to see a push above 17,255. So in other words, as long as we're stuck in here, I'm not really doing anything. I'm just observing the price action and just want to see what's going to happen further. Now, in terms of the downside, let's say in case this doesn't do this move here, look, I think that the easier option is to wait for a drop below the current lowest point of March. We still have, what, around 3 days? No, 4 days left of trading here in March. Look, anything can happen. And let's say we're getting closer to the end of the month, and we could see maybe this one drifting lower. But again, a confirmation break below the 16,817 territory here on Nifty 50 would be required, and then we could start aiming for that 16,646, which is the lowest point of September of last year, or maybe even further south. But look, long story short, at this point, I'm kind of playing the waiting game on this one. If we start breaking this upside line, okay, great. We could go a little bit lower. Then we will target the 16,817. But if that gets broken, that's where I'm going to get a little bit more comfortable with the downside, because a forthcoming lower low would be confirmed. Now, Nasdaq. Okay, guys, like jumping in general into the whole kind of banking thing. So probably, as you are aware, maybe you're watching the news and seeing what's happening right now in the US, and kind of having this little knock-on effect in Europe as well. So it seems like they have shifts in terms of, let's say, one day we'll release some data from we'll release some bad information from the US. Now next day we'll release some bad information about Europe, and so on and so on. So look, at the moment, I mean, the whole kind of saga with the Silicon Valley. I mean, yesterday the first okay, this is the point where you probably it could be a little bit difficult. I mean, not difficult, but easy to confuse, because there's a First National, First Citizens, and First Republic Bank. So the First Republic Bank actually is in kind of problems right now. So it seems like the U.S. regulator did decide to kind of give out like a helping hand for the First Republic Bank, yeah, the other ones, yeah, the Signature and the SVB got taken out, and but the SVB got most of this SVB got bought out yesterday by, or at least the news came out yesterday about from the First Citizens Bank. So putting it kind of on the map actually now, so among the top, putting it a little bit higher in the top list. But okay, we'll see how that plays out, of course. Look, at the moment, okay, great. There are some bigger other banks buying out some other banks, and okay, it's all good, but again, if the interest rates continue to rise, this is where it could become still problematic, and still could be an issue for the let's say slightly smaller banks. Like, I'm not talking about the cities or JPMs or your Morgan Stanleys and Goldman Sachses and all those guys. I mean, those guys are okay, but or Bank of America, or those guys. So yeah, those guys are okay. We're talking about the slightly smaller ones. So yeah. At the moment, it seems like the U.S. regulator is trying to help them out, or other banks are trying to kind of cash in on that, or not cash in on that, actually, to kind of increase their exposure and increase their size. So okay, let's see how all this is going to play out, because again, like I said, the rate, nobody stopped the rates, and in general, at the moment the target, how to say it, not the Fed Watch tool is showing that during for the May meeting, there is currently an expectation that there's going to be no increase, and around there's around 60%, yeah, for an increase, 40 for no increase. Okay, maybe somebody will say, hey, that's great, maybe no increase could happen. However, look, we do have the PCE, beloved inflation index from the US coming out on Friday. So the beloved one for the Fed. That's going to be quite interesting to see how it's going to play out, because if that one's going to rise and let's say beat the forecast to the upside, then well, we could see maybe this chart changing a little bit. However, again, I think that closer to May, 3rd of May, I think that maybe, it will change, of course, more. But in the meantime, I think that what the market could do is they could enjoy the moment and maybe kind of, push higher, and just kind of, it would seem like that there is a problem, but I think that the market could still rally. Now, the reason I picked up on Nasdaq, actually, not Dow or S&P, but actually Nasdaq, the technology sector. So yesterday it took a beating. Nasdaq was from the top three, was the kind of the big the loser, and other ones closed in positive territory. This one closed in the red. We saw a decline here, and because everybody was jumping into banks and kind of technology kind of stepped away a little bit. But look, in general, I would say technology so far is still okay. Looking at the technical picture here on Nasdaq, we can see that there is. Yes, we had a nice hold up near the 12,850 territory. I spoke about that level. And look, I'm going to stick to my guns. I need to see a nice, good, strong move above this barrier again, because again, we've had some false breakouts here. I need to see another good, strong move here above this barrier again in order to get comfortable with higher levels. And what I'd like to see here is the body of the daily candle staying above it. So let's see how this is going to play out, of course. For the downside, look, previously I talked about this territory here around that 12,500. But we could already start looking maybe at lower levels if we do fall and stay below the 12,732 zone right here, and then we could take it from there. Oh, I didn't say good morning, Ian. Hi, good morning to you too. I can see you there in the chat room. So I hope you're having a wonderful start of Tuesday. Good morning to everybody else who's joining in as well, guys. Happy Tuesday for you. Hope you're feeling nice and relaxed. In general, in terms of economic data today, we don't really have much. Not something spectacular. I'm just going quickly through it right now. Okay, we do have the CB consumer confidence number coming out later on today before the US market open, like half an hour before the open. So okay, let's see how that's going to play out. Of course, it's going to be quite interesting. House prices are coming out in the U.S., but okay, let's see if those can move the market a little bit. But I think that the financials is going to remain, and in general, we'll see the general kind of sentiment, sentiment in the finance sector. That's what's going to be on the lookout. Everybody's going to be watching, for the news around that, and just what could happen further. If there's it seems like everybody's waiting for the next Lehman. It seems like everybody's waiting for the next Lehman, and in a way, look, the problem here is that on one hand, we would like to see the market kind of going higher and everything, but at the same time, the Fed wants to see the inflation lower and much lower, closer to their target, which is around 2%, which is a little bit far right now from where we are. But okay, in that case, if we want more downside on inflation numbers, then certainly interest rates have to continue going higher. How the market will adjust to all that at the moment, of course, they're pricing in. But you just need a little kind of skew from the kind of the course, because at the moment the course is like that. It's nice, yeah, the course is just like kind of going, it's a steady linear function, I would say, But let's say if you just a little skew out of it, okay, this could, this could shape up the market in a different way. So again, let's see how this is going to play out. Let's not rush into anything. Let's go for, at the moment, what I'm going from is from the technicals, what I see on my charts. And at the moment on Nasdaq here, I see, like I said, I would consider some lower levels if we do drop below the 12,732. I'll consider a move actually not way all the way lower here, but towards that 50-day EMA initially, and then maybe lower. Oh, I can see there in the chat room, AV Forex, morning Dario. Good morning to you too. Yes, good morning. Hope you're also having a wonderful start of Tuesday. Now let's jump into DAX, guys. I think I kind of already stalled here a little bit. Look, I talked about DAX, and I mentioned this to you guys that in order to go higher, I need to see a clear break of this short-term tentative downside resistance line. It seems like, yes, we're getting that move right now, or at least we could get that move. We're still sitting above all of the EMAs. This is what happened yesterday, so we remained above all the EMAs. So now what I would like to see here is, yes, a break of this downside line. Then I'll aim for that 15,500 level. If that gets cleared, yes, and so on. I'm going to still aim for that upper side of the not maybe that most ideal range, but okay. Look, it's kind of a range, so I'm gonna aim for that one, the upper side. Let's put it this way: I'll aim for this upper barrier here, this key important resistance barrier near the 15,700 zone, and then we would take it from there. So for the downside in the short run, now this is important because for the downside in the short run, I would like to see a drop below this 50-day EMA, below that 15,160 territory, and then we could go towards that 100-day EMA or even slightly lower. Now, in terms of slightly lower, I would like to see a drop somewhere below this territory, below that 14,681. zone right here, and then we could go further. Now, by the way, just to remind you guys, I am looking at the futures here, not the cash indices, but you can check out our cash indices here on Easy Markets. We do have good spreads, so just casual kind of mentioning of that. There we go, guys. So anyway, look, you know your game better than me then, but anyway, USX USD, which is DXY, and DXY here, look how well it played out. Now, what I was talking about previously, I said that, look, in order for me to go higher here, I need to see a clear break of the upper side of the falling channel, because we're currently in the falling channel mode. We're kind of forming this formation. Yes, if you want to go higher, I need to see a clear break of the upper side of the falling channel. At the same time, I would also prefer to wait for maybe a push up of the 103.05 territory right here, and then we could take it from there. This could attract a few more buyers into the game, and we could go a little bit more to the upside. Now, what I said to you previously as well, that I'm not going to go way too much to the upside. I'm just going to initially target the 50, the 100, and the 200-day EMAs. And then we could take it from there. For the downside, I am keeping an eye on this 102.39 territory right here. I talked about this, and look, I mean, we fell below it. If we continue to trade below it, then yes, I will go lower. I will go towards this territory, this 101.26. But of course, before that, I will target this low, the current lowest point of March, near the 101.55 territory right here. And then we could take it from there. Gold, jumping into gold. So, look, I talked about this as well, and I said to you yesterday that, look, if we fall and stay below the 1960 territory, I will get a little bit more excited with the downside. And what we did yesterday, we fell below it and we stayed below it, and we stayed below that 23.6, and most importantly for me, retracement on the Fibonacci, of course. Look, as long as we stay below this area, I am leaning towards the downside. I am targeting this 1937-35 area, which is not far from that 38.2% retracement on the Fibonacci. So this is my simplistic approach to gold right now. If we push back above the 1960 zone, I will go higher. Simple as that. Again, it might not be as simple as that. Of course, I do accept that, but look, it's very important not to overcomplicate the markets. The markets are already overcomplicated sometimes, and it's most important not to overcomplicate things in your head, because if that happens, guys, honestly, then you could see problems. And at this point, look, I would say just stick to a simplistic approach. Have your stop losses in place. Risk only what you're willing to lose. That's the most important in all this. And then, unfortunately, that's the market we're dealing with. It's very unpredictable. However, this is what we tried to do. We tried to predict it. But I understand that it's very difficult to predict it, for example, way too far into the future. But at least these little short-term moves we can, and that's what we are trying to, kind of take advantage of. So let's see how this is going to play out, guys. Oil, beautiful. Honestly, look, I mean, this I mentioned this yesterday and the day before yesterday. I said to you, look, if we do pop back above the 70 territory, I will go higher. And we did get that pop, and we moved nicely to the upside here. But what I said to you before as well, that my next target will be the 72.25 territory right here, then the 73.81 right here, or maybe even better, the best case scenario for me is a test of this upside support line and this 50-day EMA, which, by the way, I think is going to coincide by the time we could reach that. It might coincide here. So I'm still aiming for that. Look, if you've missed this jump, okay, this is the moment where, of course, if you want to chase it, in general, I don't recommend chasing markets, but if you miss this move, look, I mean, there is still a bit of room here, but if this, for example, starts just jumping around here for now, just wait and see what's going to happen. This is the beginning of the Europe session here, so let's see what's going to. We still have the US one to go through, so just keep an eye on it. Maybe we'll get a retracement or something like that, and then maybe we could see, a pop higher, or maybe it's going to pop a little bit higher, but then retrace and then move back up again. So just kind of be careful and be cautious about this. If you want to take still look at something here for the upside, keep your eyes on yesterday's high near the 73.09 territory right here. And if we clear that, this will confirm a forthcoming higher high, and then we could maybe this way could be a little bit easier to try to aim for the upside. But then don't forget about a possible kind of move back or something like a throwback, because again, if this gives us a breakout here, everybody's going to get excited, everybody starts jumping in, and then the market reverses back down, takes out a lot of traders, and then reverses and goes back up again. So this is what the standard practice what we see here happening. So just be careful and be wary of that, and then position yourselves correctly accordingly. I mean, because again, this one's a little bit on the tricky side, but hey, could still be an interesting one. But at the moment, like I said, I'm only targeting the lower side of the upside line here. And look, I mean, I talked about this before. I said that if you watched my previous videos, I said that look, whenever we break a trend line, it sometimes has this tendency to come back from the other side and test it from the other side. So it seems like this is what we're doing right now, the same thing again. Look, I looked at this one before, maybe something that you don't look at very often, but hey, I just wanted to point it out that a while ago, last week actually, I think I talked about corn, because look, I said to you that it seems like we are forming a nice little inverted head and shoulders pattern. Well, and when I was talking about this one, I said that, hey, maybe we're still kind of in the process of forming the right shoulder here. Well, I said that, hey, maybe if we start falling below the 622 territory right here, then scrap the whole idea of the inverted head and shoulders pattern. But boom, it worked out nicely. I'm quite happy about this. And the most important, we're now we broke already the 642.63 territory. Well, roughly around here, guys. So 643 territory, let's put it this way. We broke that one and we pushed higher, but we are currently getting a hold up near the 50-day EMA. If we clear this one, yep, I am getting a little bit more excited with higher levels, guys, and then we could take it from there. Maybe the next target, of course, will be the 100-day EMA, then the 200-day EMA, and then we'll take it from there. Bitcoin, just a quick update on Bitcoin. So look, yesterday I talked about this and said that, hey, in general, the fact that we broke through this barrier right here, that's great, that's wonderful. But I said to you that in order for me to go further north, I need to see a clear push above that 28,836.5. Again, this is just what I see on my chart here, but let's round it up here a little bit. Excuse me, I would say 28,950 territory, somewhere around there. If we clear that one, then yes, the next target for me is the psychological 30,000 mark, and then we will take it from there. At the moment, the upside scenario is just slightly off the table because, again, we broke this upside line. We're currently trading below it. So I need to see, I would like to see maybe a bit more retracement on this one right now. If we stay below this upside line, if we push back up above it, okay, then, we could start, maybe considering the upside, especially if we also break this downside line here. We could see maybe we could consider some higher levels, but then we do have a bunch of resistance barriers here which you need to consider as well. So just kind of being a little bit more on the cautious side. In terms of like I said, the downside right now, if we continue to trade below this upside line, I will aim a little bit more for a little bit of a little bit of a larger correction to the downside. And another thing, I mean, it just probably spotted me maneuvering my crosshair. Where's that horizontal? There we go. This level right here, the 26,550. Fantastic support yesterday. Look at this, beautiful. So if you're looking for, let's say, some more retracement, then a drop below this hurdle might do the trick for you, might help out. So just keep that in mind. In terms of Fibonacci's on this one, for example, since the rally here began in the beginning of March and all the way up until here, you can see that we're currently just near the 23.6% retracement. So basically, this 38.2 is just sitting perfectly near my levels here, near my 25,000. This highlighted zone that I talked about previously. So. Okay, let's see if this is going to play out. AUD is USD jumping into a few pairs. So, okay, this one's a little bit messy, but okay, I have to take it that it's working. And the fact that we're seeing AUD USD trying to push back up, this kind of indicates that maybe the markets as well, the indices could push back up a little. However, again, it's too early to talk about that. Look, I mean, we're all getting excited here because, hey, great, you know, we were rebounding from this upside line. Wonderful. Wow, what, you know, we could go higher, much higher. But actually, no, look, you have to approach this as always very carefully because the fact that we're rebounding from this upside line, okay, great. I am leaning myself leaning a little bit more towards the upside, but my problem here is that we do have the EMAs, and those did provide good resistance recently, as you can see here, and it drifted back down. So if we do clear the EMAs, all of them, great. I will go higher. I'll start aiming maybe for one of these levels here, but or actually maybe somewhere around here initially, the 0.6920, and then I'll take it from there. But at this point, guys, like I said, if we start, if we first of all push above the 0.6688 zone, okay, great. We could go towards our next target, and by the way, it's not this one. Yep. This one right here is going to be 0.6759, approximately around there. So this is going to be my next target around the 50-day EMA, and if that gets cleared, so on and so on, we're going to go slowly, step by step on this one. We're not going to rush into anything. So let's keep that in mind. For the downside, now, first of all, let's get rid of this downside line. No longer needed. Now we're just keeping an eye on that. On that upside line, if we do get a nice clear break below it, great. I will go a little bit more towards the downside. NZDCHF, guys, very quickly on this one. I looked at this one previously, and look, I would say mission accomplished on this one because what I spoke about previously was that in order to consider some, let's say, some moves to the downside, because look, after we tested this downside line, I said that if it holds, we could see a decline, but I'll get more bearish if we do fall below the 0.5745 territory. We fell below it, and I said that my next target is going to be around here, and look at the perfect hit. That's great. That's wonderful. And that's why I'm saying mission accomplished, because now it seems like it's trying to reverse back up. This level is in the way a little bit. We need to get rid of it. We're seeing a nice reversal here back up. At this point, I'm going to take again, a very careful approach in terms of the downside. If we fall below the 0.5664, I'll go lower, but I'll go initially towards this territory, the 0.5620, approximately around here. It provided good support recently, so if that one does the same trick again, we could see a nice rebound. But again, I'll pick up on, I'll pick up on that one a little bit later. Look, if you want to go for the upside on this one, and you're thinking that maybe, hey, this is starting to form these like higher lows and everything, and it could be the case. Yes, I'm not saying anything. I mean, it could be the case. The only thing is you have to consider that if you go higher, then probably your stop loss is somewhere around here near this hurdle, because if that gets cleared, I mean, it could open the door to some lower levels. If it pushes higher, great. Okay, we could start testing this downside line together with the 50-day EMA. And if that gets cleared, yes, more buyers potentially could join in here. So I'll keep this something on the chart. So yeah, quite an interesting pair if you do like to trade this one. But again, I do personally like to look at different pairs, exotic and most popular ones, of course, because they tend to provide quite interesting setups. And you look for a good setup everywhere, guys. And kind of, although you have your preferred, I have my preferred ones to trade, but I still look at all of them just to kind of, because sometimes you can see something on one pair that can actually influence your instrument that you're trading. So that's why it's better to look at everything. USD-CAD, jumping into USD-CAD, and there we go. Beautiful hold up here near this 1.3750 zone. Look at this beauty. I mean, I talked about this, and I said that if you want to go higher, I need to see a clear push above that 1.3750. We did get a push, but it was a false breakout. That doesn't really count. We needed to see the body of the daily candle staying at least above this. And now instead we are drifting back down, and we're now flirting with this 1.3630 territory near the 50-day EMA. If that gets cleared, guys, I am leaning towards the 100-day EMA then. Or even better, all the way towards the 200-day EMA. At the moment, a few levels that I'm going to mark, but still, excuse me, I'm going to aim for the EMAs instead. So the 1.3537 could be a nice, interesting target. It acted as a good area of resistance and support. Or we could see this one getting tested, the 1.3441, approximately around here. And then we could take it from there. But again, that's all this is in scenario if we do drop and stay below the 1.3630 or this 50-day EMA. GBPJPY. So I'm not going to spend too much time on this one because, again, this is still the same analysis valid. Look, I mentioned this yesterday. If you want to go higher here, a break of this downside line is needed. If you want to go lower, a break of this upside line is needed. So look, it's a very simplistic approach here for now. We're coiling up. Hopefully the exit will be much stronger, so let's wait and see. GBPNZD is something that I haven't looked for quite a while, to be honest, and I think that since the beginning of the show I never looked at it. But look, I actually do like to keep an eye on it because so before I start drawing any lines, you can see that it's nicely drifting to the upside. We're after reversing higher in the beginning of February, we're forming these higher lows here, and yes, we're forming higher highs as well. At the same time, the EMA, the 50-day EMA, if you're following such strategies, then it crossed the 100, the 200, and now the 100-day EMA is crossing this. Look, everything's kind of leaning towards the upside, further upside, to be honest. But okay, look, anything can happen. Let's say, back in the day here, for example, when we also had the strong move here to the upside, everybody was thinking like, hey, this is where, we're going to start pushing back up again nicely. So, okay, look, it was the case initially, but then it formed a nice head and shoulders pattern. Beautiful one, by the way. Look at this, like, nice textbook pattern, and we broke out to the downside. Look, if this pair does like technical setups and it does follow let's say different patterns, and one pattern that I'm keeping an eye on, and I'll start off with the upside line here. Excuse me, my voice is going down a little bit. There we go. I hope I cleared it up a little bit. But so of course the upside scenario is currently supported by this upside line taken from the low the 3rd of 3rd of February. But at the same time, I am watching something around these lines here. So basically, one of my favorite patterns is a wedge, rising and a falling wedge. So I like these very, very much because they tend to be very accurate. However, there are occasions when it doesn't happen in the in the expected way. But look, overall, I am aiming for the upside. While as long as we remain inside the pattern here, inside this rising wedge, then the overall trend could still remain to the upside. But don't get me wrong, we could still drift lower. We could test the lower side of the rising wedge, then rebound and push back up. So basically, in other words, something like this could be possible. The rising wedge idea, because basically what I'm expecting here is at some point later on in the future, I'm expecting a breakout to the downside. So at this point, like I said, yes, I'm going to be observing this one. And one of the reasons also like to support the downside scenario, for example, is the fact that we are trading below this downside line, guys. So yeah, so in other words, there is still room for some more upside, maybe all the way to this downside line. And so basically, it would be a very beautiful move. Let's say if we continue to trade inside the pattern and we continue to move higher overall within the pattern and end up reaching this downside line, or maybe come very close to it. I think I'm going to be aiming for that psychological 2 level again. It does like that level, to be honest, very much. And then we'll just gonna go from there. So in other words, let's say also do not exclude, because this is a very volatile pair. First of all, you have to have like a very wide stop loss on this one, because again, it might take you out very quickly. And let's say don't be surprised if, let's say, we trade around here a little bit in this pattern, this rising veg, we push higher, we come closer to the upper side of the rising veg, pierce through it, test the downside line here, and then drift back down by the end of the day, and we'll see the body of the daily candle kind of staying inside a pattern. However, we'll have a nice beautiful false breakout. So again, the reason why I'm mentioning these scenarios again, these happen, and we do come across, this is where traders get frustrated sometimes, because they think that they were right, and kind of in a way, at the end of the day, they were right, but it took them out because there was a huge move or something like that. And this is what happened. This is what I'm trying to prepare you for, because again, these things happen, and just be cautious and careful about it. And yes, like I said, at the moment I am cautiously drifting to the upside here. Yes, I'm considering maybe a bit of a retracement at some point here, maybe a testing of this lower side of the rising veg, but maybe it decides not to go all the way here back up and decides to break the rising veg straight away. Great, even better. Actually, for me, the goal is to wait for the break of the lower side of the rising veg, and then we could go lower. EURGBP, quick update. Look, I'm not going to spend too much time on this one, but this one's drifting back down. Look, as I talked about this strategy right now, and I said, look, I'm going to stick to these EMAs. So far, they're doing the job for me here. So we drifted back below the 50-day EMA. I said my next target is the 100. I said if we break the 100-day EMA to the downside, my next target is the 200. And especially if we stay somewhere below this territory, the 0.8783, and so far we are, yes. So I am kind of cautiously aiming lower, targeting that 200-day EMA. So let's see how this is going to play out, guys. At the moment, like I said, I'm bearish on this one. And yep, if we remain below this, like I said, I'm aiming for that 200-day EMA. If we push back above the 100-day EMA, great, I'll go for the 50-day EMA. I'm gonna just take it very simple on this one. EURCAD, just a quick update. Look, I haven't looked at this one for quite a while, but basically what's happening here, overall we're trading nicely above all of the EMAs. If we this is what I wanted to start drawing some trend lines. We're kind of oh, not this one, but this one right here. So we're trading above some of the upside lines. This is a short-term tentative upside line taken from the low the 13th of February. Also, we are trading above this trend line here as well. Look, all of them are very tentative in a way. Maybe we could even draw it this way. Maybe we'll get some more touches. There we go. We're getting some more touches. Look, I will keep both of them on the right now on the chart, because again, this is it's a little bit still tricky. And look, what I'm going to do here is I'm going to consider maybe a larger correction here to the downside. But if we remain above, let's say the first upside line here, the slightly longer one, great, we could rebound. If we break the upside line here, my next target is the 50-day EMA together with this short-term tentative upside line, and maybe we could see a rebound from that one. And look, we do have some support levels which previously acted as a good area of resistance. This one right here, the 1.4642, so we kind of have this area near. Beautiful area for a rebound. If that happens, great. I'll go back up again. But if we start clearing both of these trend lines, then I will start considering a move back to the 100-day EMA, and then I'll take it from there. And finally, EURUSD, guys. So EURUSD, look how well this 1.0760 territory provided support. We had a false breakout, and look at this. It pushed back up. Yesterday we did get another move here, but this move, by the way, happened on Friday. This level held yesterday. We had another kind of false breakout, and we pushed back up. What I said to you previously, that if we do push back above the 1.08 zone, well, great. Maybe we could start pushing, back to the upside. So far, I'm going to aim for that 1.0885. That's going to be my next target, and maybe the 1.0926 zone right here. It was a good area for resistance previously. Let's see if we can, can get another test here as well. Look, this pair might. So yeah, like I said, sorry, I'm seeing a comment from I am drinking a lot of water. But I'm trying to go through this one without kind of any interruption or anything. But hey, I'll drink some tea. I have some tea, so thank you very much, Ian. Thank you very much for this opportunity to have a drink. But anyway, yeah, thank you very much for your comment. I really appreciate that. And hope everybody else is finding use of these videos. I mean, like I said, they're not something maybe spectacular, but hey, look, I'm here with you, and I'm trying to kind of provide you these technical setups and how to kind of maybe try to see the market. Still, at the end of the day, you will be your own judge. You will take your own decisions. I mean, you're just kind of I'm just telling you how I see it, but maybe you see it differently. That's fine. So every trader sees the markets differently. So just kind of what we do all the time is we're trying to kind of combine and get some sort of logic in everything, and maybe then kind of make our own judgment. So I hope these sessions kind of help you to do that. So, and coming back to Euro USD again, like I said, right now it's kind of a little bit choppy, I would say. Even look, I said what I said before, that if we do push back above the 1.08 territory, I'll go back up. What I'm curious, actually, and maybe again this is me getting ahead of myself again, but what I'm curious is to see if this is not going to end up being something like a range. If this is going to be a range, well, then it's even better, actually, because, okay, I don't like to trade trend ranges. If you do, congratulations, you're doing much better than me. But I like to trade breakouts, and basically here I would say we might see the pair maybe trading around here just for a little bit, but don't forget PCE on Friday. Going into Friday, if let's say this pair continues to trade in this range, or gets close on Friday, gets closer to one of the sides here of this range, let's see if the PCE can make a move here, can force this pair to make a move. Could be an interesting one, guys. At the moment, I think that the expectation for the PCE is a little bit on the lower side. Let's see if that's the case still, because again, I think last week there was no forecast available. GDP, oh, by the way, GDP figures on Thursday, US GDP figures on Thursday, but Friday, well, will be a little bit more eventful. GDP figures of Britain and Canada on Friday as well, manufacturing PMIs numbers on Friday, manufacturing and non-manufacturing Chinese numbers on Friday morning, so keep that in mind as well. German unemployment, preliminary CPI numbers on Friday as well, so basically from Europe, like I said, the PCE numbers. So currently there is expectation for the month-on-month decline, but not the year-on-year one. So it's going to be quite an interesting one. But like I said, it might be a mover, but let's see if that's going to happen. At the moment, I am just observing the price action. I am leaning a little bit more towards the upside on this one, as long as we stay above the 1.08 territory. So let's keep that in mind. Okay, guys, I think I'm running out of time. Yes, so thank you very much for watching and listening. I really, really appreciate that, guys. Thank you very much for that, and really thank you very much for your comments, for your likes, for everything, for your participation. I honestly, bow down to you guys. Thank you very much for that. And if you wanna catch me tomorrow morning, as always, at my my daily pitch for the traders, daily pitch international. With easy markets here. So if you want to catch me tomorrow morning, 6 o'clock. 6 o'clock GMT time, and we'll have a blast. We'll look at some new instruments, maybe some other ones, and we'll take it from there, guys. But yeah, have a beautiful trading day. Have your stop losses in place. Risk only what you can afford to lose. That's the most important. And let's meet up tomorrow at 6 o'clock GMT time. Thank you very much, and bye-bye. If you want to continue to please the trading gods, subscribe to our channel for a blessing.